Hello, it's Thursday the 14th. I'm FxPlew and this is the market brief. Now, Huw Pill has been on. The chief economist reminded us that historically the UK has needed higher interest rates than the G7 partners in order to tame domestic inflation. This seems to stand true once again now the MPC is grappling with wage growth that is still comfortably above inflation. Catherine Mann continued to vote against any rate cut where she remains concerned about secondary inflation. That is where the effects of the initial inflation are passed on to price setting and to future wage demands, which can enable inflation to become embedded. In that environment, there is certainly a case to hold rates higher for longer. However, where she is the lone vote against a rate cut, her concerns don't necessarily stack up with the data. Over in the US, CPI inflation data showed that headline inflation was 2.6% in October. That was up from 2.3% in September. Core inflation remained unchanged at 3.3%. But none of the Fed members that have been on since then really seem concerned by this, or indeed by the number of new jobs created in October. Most are confident that inflation remains on a downward path and is not stuck above their 2% target. Indeed, the market still expects another rate cut from the Fed at the December meeting, although that might be a little bit more of a difficult discussion if inflation goes up again this month. Meanwhile, in the market, the dollar continues to post gains after the election. The dollar index is well above the previous high for the year. We touched 106.75 yesterday, so we could be ripe for a correction, perhaps driven by a bit of profit taking from this recent rally. Sterling crossed below 127 against the dollar, but we are standing up better against the euro, and we kick off this morning around 126.85 against the dollar, 120.30 against the euro, and euro dollar is around 105.45 on the open. That's it from me. Have a great day.
I got the blues.